If you're buying your first home in British Columbia, you could be missing out on thousands of dollars, and most people don't even realize it until they've already bought the home. Now, today I'm going to be breaking down every first time homebuyer benefit in British Columbia for 2026 in plain English so you can understand, you know exactly what you can use to help you buy much sooner. My name is Jared White. I'm a top mortgage broker here in British Columbia, and I help first time homebuyers build real plans that actually work. Now, let's get right on into it. So, we're going to start off with the FHSA, the first time homebuyers savings account. This is the biggest and most important one. The FHSA basically is the best parts of an RRSP plus a TFSA combined. Here's how it works. When you put money into your FHSA, that money is tax deductible, just like an RRSP. Then, when you use that money to buy your first home, you can take it out tax-free, just like a TFSA. And unlike an RRSP, you do not have to pay tax on it if you take it out. And you can continue to contribute up to $40,000 total over the lifetime to be able to use for your down payment. That means if you're earning good income, you can create a tax refund every single year by contributing $8,000 that you can then eventually use for your down payment. The biggest mistake I see people make is they use a regular savings account and they ignore using their FHSA. If you plan to buy your first home at some point in time, this is normally step one. Now, step two is the RRSP homebuyers plan. Like the FHSA, you can also open up an RRSP account and use what's called the homebuyers plan. This allows you again to put $8,000 into that account every single year, up to a total of $60,000 that you can then take out to use for your down payment. This can actually be stacked with the FHSA, so you can take 60 from there and 40 from your FHSA for a combined total of $100,000. Now with the RRSP, here's the catch. This is not free money. This is essentially borrowed money. Any money you put into the RRSPs, you actually have to pay back into them over the next 15 years. So you essentially get put on a repayment plan. The good news is, like I mentioned before, you can put these together, and if you are only going to use one of them, I would use the FHSA. It makes a whole lot more sense. The money also has to be in your RRSPs for at least 90 days, whereas the FHSA, there's no time requirement for how long the money's in there. Next up, we got the first time homebuyers tax credit. This is a smaller one, but it's worth knowing. The year that you buy your first home, you can then claim the first time homebuyers tax credit, which is going to be up to $10,000, which usually works out to be about a $1,500 return come tax season. It's not life-changing, but at the end of the day, it's free money and it essentially covers your closing costs. The biggest one, in my opinion, is the BC property transfer tax exemption. This is where if you're in BC, you can save some serious money. Now, when you buy a home in British Columbia, you pay something called property transfer tax. This is calculated at 1% of the first $200,000, 2% of $200,000 to $2 million, and then 3% from $2 million to $3 million. And then for those very expensive homes over $3 million, you're actually paying 5% for the amount higher than that. So as an example, on a $500,000 home, you're paying $2,000 for that first $200,000, and then $6,000 for that last $300,000 for a total of $8,000. Now, when you're a first-time home buyer, you actually get a discount on this. You get up to $8,000 discounted from your property transfer tax, meaning if you bought a house under $500,000, you actually don't have to pay anything for your property transfer tax. Now, you get this discount as long as you're buying under $835,000, and there's something called a sliding scale up to $865,000. As an example, if you were to purchase right in the middle of $835,000 and $865,000, you would get half of that discount. If you purchased $1 less than $865,000, you'd pretty much get no discount whatsoever. It scales depending on how close you are either to $835,000 or $865,000. But the general rule of thumb is try to stay under $835,000. You're going to get your $8,000 discount. This is absolutely huge. The next thing we want to talk about is 30-year insured mortgages. Typically, when you put less than 20% down, you have to get what's called an insured mortgage with CMHC, Sagan, or Canada Guarantee. These are 3 insurers. Don't worry, we take care of it for you. However, they used to have a guideline that it maxed out at 25-year amortization, meaning your payment is going to be stretched out over 25 years. When you put more than 20% down, you can get a 30-year mortgage, which makes the payment a little bit less and more manageable. So they recently started to allow borrowers that are first time to buy resale properties, so things that are already existing on the market, and get an insured mortgage but have it as a 30-year amortization to make your payment a bit lower. Now, if it's a pre-sale, you can do whatever. You can get 30-year insured regardless. You don't even need to be a first-time home buyer. But for resale properties, that's the benefit that you're getting. Now, the next thing I want to cover is the GST rebate on pre-sale properties. So pre-sale properties are essentially pre-construction homes, so things that aren't built yet. You might buy it now, move it into a year later, or timelines may change from project to project, but essentially you're buying something brand new. And this is a huge opportunity nowadays, and it used to be not the greatest because you're paying what's called GST, 5% of the purchase price. Yes, you can avoid the property transfer tax. It's a rule that if it's a pre-sale home under 1.1, you don't pay the property transfer tax. But you used to pay 5% GST, and that's even more than the property transfer tax. And if it's over 1.1 million, then you're paying both property transfer tax and GST, and it really didn't make a whole lot of sense. But if you're a first-time home buyer, you actually are completely exempt from this GST of 5%. It's not quite an exemption. It's a rebate, meaning after closing, the lawyer will essentially rebate that money back to you. So you still have to have the minimum down payment for the full purchase price plus the GST, but you'll be given that GST back at closing. Now, this is massive because people that bought $900,000 townhouses were paying 5%, which is pretty close to $50,000 in GST. Now you would simply walk in the door and grab that same home for 900 grand. You're getting it at a substantial discount compared to what other people would buy it at. So I hope this helps. These are all the first-time homebuyer benefits that you can benefit from if you're in British Columbia, Canada. And if you're in need of a mortgage broker to help guide you through this entire process of purchasing the house from start to finish and make sure that you're protected and you get a competitive product, then be sure to reach out. There is a link in the description, and we'd be happy to have a chat. Thanks a lot for watching. Catch you on the next one.